Breaking news. Things got completely out of control. Huge updates keep roaming around Nvidia. Investors are happy, but they are completely missing a major red flag. Do not be fooled by the rising chart. Now is a very important moment to actually pay attention. But what am I talking about? Well, let me explain. Disclaimer. Ever since they released their quarterly earnings last week, their stock has been on a steady rise. The jump started with their earnings news, but there's more to the story. The recent surge in Nvidia's stock price is actually linked to another big announcement from yesterday. And just today, this news kept spreading all over the internet. Nvidia's sales have already been impressive, but now investors are even more excited because it looks like they have a new major customer on the horizon, Elon Musk's xAI. This is really great news. Elon Musk has a knack for raising substantial funds. He's done it time and again with his various ventures. And now it seems a significant portion of that funding could be directed towards Nvidia, which could push their stock even higher. We can all remember that the real boom started when they began making significant money from their processors used in artificial intelligence applications. Their GPU sales have been climbing steadily, with Nvidia projecting that their revenue this quarter will more than double compared to the same period last year. These sales are going to various tech companies working on building AI large language models and boosting computing power. Last year, Nvidia's top customers for their GPUs were some of the biggest names in the tech industry. This not only boosted their sales, but also significantly enhanced their reputation. When major companies rely on Nvidia's technology, it speaks volumes about the quality and performance of their products. This trust from well-known tech giants further solidifies Nvidia's standing as a leader in the AI and computing sectors, encouraging more investors to have confidence in their future. But here's the kicker. While one of Elon Musk's companies, Tesla, was already a major customer for Nvidia, another Musk venture just shook things up. xAI, Musk's startup focused on developing artificial intelligence, recently announced it raised a fresh $6 billion in capital. We mentioned it in previous videos on this channel, and arguably we're one of the first ones, so you better subscribe to this channel to not miss the hot news around Nvidia. Anyway, many believe a significant chunk of that $6 billion money will go toward purchasing Nvidia's processing chips. Reports suggest that xAI is planning to build a supercomputer to power a new version of its chatbot, Grok. To do this, xAI may partner with Oracle, potentially using tens of thousands of Nvidia chips. Given that xAI wasn't even among Nvidia's top dozen customers for their H100 GPUs last year, this news has investors feeling very optimistic. They see a strong and growing demand for Nvidia's AI chips extending well into the future. That's why Nvidia's stock is still considered a good buy, even after hitting record highs recently. People are thrilled about this because many were expecting a correction. For those not familiar in the stock market, a correction means a pullback or a decrease in stock prices after a significant rise, usually by about 10% or more. Investors thought Nvidia's stock might cool off after its rapid ascent. Instead, there's now even more room for growth, which has been a pleasant surprise. It's like expecting a great meal to end with a simple dessert, but then being surprised with a grand, multi-layered cake instead. Investors were ready for a slowdown, but instead, they're seeing even more potential for growth, which has them very excited about Nvidia's future. But there's a big red flag that most investors seem to be ignoring, and it's something they really shouldn't overlook. While Nvidia's prospects look fantastic with new customers like xAI and rising demand for their AI chips, there's a risk that comes with such rapid growth and high expectations. Investors are so focused on the potential gains that they might be underestimating the challenges and vulnerabilities that could arise. But what is it about? Well, let's circle back to Nvidia's earnings reports. For the current quarter, Nvidia expects sales of $28 billion, give or take 2%. This is well above the analysts' consensus of around $26.66 billion. While Nvidia notes that demand is far outpacing supply, they also forecast a gross margin of 75.5%. On the surface, this guidance looks impressive. After reporting a 64.6% gross margin in the first fiscal quarter of 2024, Nvidia's forecast of a 75.5% gross margin for the current quarter suggests they've scaled remarkably quickly for a company valued at nearly $2.6 trillion. However, there's a subtle warning here that many optimists might be overlooking. In the quarter that ended on April 28th, Nvidia's gross margin was 78.35%. For the second quarter, Nvidia's gross margin is expected to decrease by 235 to 335 basis points based on their guidance. This drop might not seem significant, especially since their gross margin has grown by about 13.8 percentage points in a year, but it likely signals the onset of two anticipated challenges for the company. First of all, Nvidia is starting to face real competition. After dominating the high-compute GPU market for so long, Nvidia will now contend with Intel's upcoming Gaudi 3 AI accelerator, set to launch in the third quarter, and the ongoing rollout of AMD's GPU. Both Intel and AMD are targeting Nvidia's H100 GPUs, aiming to attract enterprises that want to train large language models and run generative AI solutions. Even if Nvidia's AI GPUs continue to outperform AMD's and Intel's in speed and computing power, the introduction of these new data center hardware options will reduce the scarcity of AI GPU chips. This scarcity has been a major factor driving up the prices of Nvidia's GPUs. The expected 235 to 335 basis point decline in gross margin could be an early sign that Nvidia's pricing power is starting to weaken. With more competition entering the market, prices might not stay as high as they have been, which could impact Nvidia's profitability. Investors need to keep an eye on this development, as it could be a significant headwind for the company moving forward. The other issue Nvidia faces, which shouldn't be overlooked, is that its top customers are developing their own AI GPUs. Companies like Microsoft, Meta Platforms, Amazon, and Alphabet account for about 40% of Nvidia's net sales. Meta Platforms even increased its capital expenditures forecast for 2024, likely to boost its investments in Nvidia's AI GPUs. However, with all four companies actively working on their own AI accelerators for their data centers, their dependence on Nvidia's hardware is almost certain to decrease in the future. This shift might be partially reflected in Nvidia's forecasted decline in gross margin. It's also important to remember that every major innovation trend over the past 3 decades has experienced a bubble-bursting event. While Nvidia seems invincible right now, history shows that early-stage hype around new technologies often leads to a peak, followed by a significant correction. Nvidia's fiscal second quarter gross margin guidance could be an early sign that the stock has reached its peak. Investors need to be cautious and consider these potential headwinds, even amidst the current excitement. However, fund manager Louis Navelier has a different take. Despite the impressive rise in Nvidia's stock, he doesn't view its valuation as overblown. It's hard to call it a bubble given Nvidia's PE multiple has actually fallen in the last year thanks to volcanic earnings growth, he said. Currently, Nvidia's forward PE is 41, which is much lower than Tesla's 71. Navelier points out that Nvidia is uniquely positioned to build out the databases AI requires and will likely acquire the most innovative startups as the AI market grows. He describes Nvidia as the lead horse in the race, noting that the stock has risen about 30% in a month and 132% for the year to date. Tech venture capitalist Gene Munster, co-founder of Deepwater Asset Management, has previously stated that AI is a bubble, but he believes this bubble could last another 3 to 5 years. This suggests that, despite concerns, Nvidia might continue to thrive in the near term. But what is your opinion on that? Comment down below. I'd be eager to read your opinion. If you are curious to find more, then make sure to click on one of the videos you see on screen. And with that, we come to the end of this video. If you enjoyed the video, then please like this video and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video to as many people as possible. Let's get this news out there.